Hello and all, good morning everyone. This is Ares from Parallax Capital Advisors. So in yesterday's video I went through the zigzag pattern and just broke down the basics of a zigzag pattern. So today I feel like going through the flat pattern and just break down the basics that you can expect when you're trying to look for a flat pattern. So a flat pattern is more or less a timely based correction, as opposed to a zigzag is more a price-based deep retracement. So in a flat pattern you'll see is more or less you'll see a sideways action. So when you see like this is like the last impulse of a previous wave, and then you'll see a three wave up, three wave down, and then a five wave sequence. So it's usually the upper bound and the lower bound, they usually kind of like do not exceed unless you're playing within an expanded flat, which I'm going to show you that in a second. So with the regular and an expanded flat, its subsequence is subdivided in 3, 3, 5. So wave A would be in a three-wave sequence, so that'll be ABC. It can also be a WXY, and wave B would also be in a three-wave sequence, so that'd be ABC or WXY. And then wave C would be in a five-wave sequence, and which is obviously 1, 2, 3, 4, 5. And what usually you'll see is that wave B would meet the original point of wave A, and wave C would meet the extreme point of wave A. And with the expanded flat, it's slightly different. The only difference is that wave B actually breaches the original point of wave A, and then wave C would breach the extreme of wave A. So you can see the expanded flat looks like it's formed a new low here, and that usually traps a lot of traders. You know, they'll be like, yep, great, it's broken my key level, I want to get in. But if you look at it carefully, it's formatted in a three wave sequence, therefore you shouldn't trade that. And then when you see the price going up in five wave sequence to the upside, it traps traders again, because they're like, oh wow, okay, you know, looks like the trend's ended, it's time for me to go to the upside now. And then they'll wait you know, for the pullback, and they may possibly you know, guess that it's a zigzag or anything like that, and they will decide to go long. But nope, market is, you know, it will formate in a more of a five-way sequence to the downside, and then you see that, you know, you've been trapped twice in a flat pattern, especially on an expanded flat. So it's a very strange pattern. I enjoy trading flat patterns as well, because, you know, they usually tend to be around wave 4. So if you see them in wave 4, you can catch the fifth wave. And then you can also see them in wave B. So for example, if you've seen a zigzag, they'll be playing in a B, and they can also be within like an X connector of a complex correction. So I'm just going to show a quick example here on cable that we saw at the beginning of March. So what you should do right now, guys, is pause the video just for about 30 seconds and then just label this, and then see if you guys got it the same as I've counted it. So having a look at this flat pattern that we saw early this month. So this is in fact a regular flat, and the way I would draw this is like this. So that's A, B, and C. I'm just going to change the degree to minute. So looking at this here, I mean, how do you confirm that whether this is the right count? So the way I would do it is I will look at the subdivision. You don't always have to do it. It just depends on what time frame and degree you're in. You don't want to kind of like just go down Alice in Wonderland sort of spiral. You know, if you kind of like, you can see the subwaves, you can just look at them and count them just to confirm. So the way I see this is I see a three wave up here. So if I break this down, A, B, and C, just going to reduce the degree to sub-minute. And then within wave B is actually playing another flat. So wave B actually has a flat, so we go A, B, C, A, B, C, and then 1, 2, 3, 4, 5. So that's a three wave sequence, isn't it? Because flat A, B, C overall is also a three wave sequence. So there we have A, B, and then C, And then finally, within wave C, you have a 5-wave sequence to the upside. So that would be 1, 2, 3, 4, and then 5. There we are. So there you go. Here's a live example of what a flat pan looks like. So your next question probably is, okay, well, how do we trade this? We're going to go into much more detail in terms of Fibonacci's, entries and exits when it comes to the flat pan, especially, what wave they're playing in. But just to give a brief two examples of how traders tend to trade them. If I actually go back up to an example here, so one of the most aggressive way to trade this would be when you see the break of subdivided 5-wave sequence in wave C. So when you see the break of wave 4, sub wave 4, traders tend to get in to this. So they'll literally have their entry point here, and they'll have the stop above the extreme of wave C. Yeah, there's another more conservative way to trade this, and if you haven't guessed it yet, it would be the break of the extreme of wave B. So that's much more conservative because obviously you're waiting for this whole pattern to break out. Essentially, you're waiting for the channel to break out, and then you'll have a stop all the way up there. But if the risk to reward is good, if it's, say, for example, 1 to 1.5 or 1 to 2, yeah, you can take that trade. I would happily take that trade as well. So they are the two sort of basic ways to enter into the flat pattern. Obviously, we'll go into much more detail in the near future, but for now, you can obviously use that and kind of just practice around when you're back testing or when you're playing around, and just to kind of see what sort of risk reward you can get from individual different entries. So that's it from me today, everyone. If you have any further questions, feel free to give me a shout. Cheers.